Hey traders, Raghee here. Let's get a quick audio and video check in our free training room. My YouTube folks, great to see you all. All right, happy Tuesday, gang. Happy Tuesday morning. Hope everyone is doing well. We have this week's actually a pretty quiet week in terms of data releases, but of course we're in the beginning of earnings season. We're getting the financials from Friday to into this week, and we're going to have some important releases all the way into May 4, where we have Apple. On May 3, we have the FOMC. We're coming up into that blackout period pretty soon here, as we're anticipating a quarter-point rate hike from the FOMC, and that will, for now, unless something changes, that will for now be where expectations are going to peak, that the FOMC is going to hike at this next meeting in May, and then hold in June, hold in July, possibly. There's a slight chance of a cut in July. And then what the Fed fund futures are reflecting, and dare I even say communicating to the Fed, is that we want that pivot, right? We want that pivot. And if you're looking at what I'm looking at as well, and we talk about this pretty darn often in This Week in the Market, and that is, looking at data-based rate of change, which is just a fancy way of saying trend. And you'll see here, May 3, 89% for that quarter point hike. So that leaves us at to 5.25%. You see here, 72% expectation for a hold on the June 14 meeting, 57%, almost 58% expectation for a hold at the July 26 meeting. And then here comes the interesting part. And I will say this is probably favoring a hold a little bit further into the year than we've seen up until probably last week, because now you can see that the hold at 5 to 5.25 and the cut at 4.75 to 5% is pretty much neck and neck. Now, obviously, between the data and the May 3 FOMC, we'll get a lot more clarity out of this. At that point, we'll be at 5 to 5.25, most presumably. And then we can see what June, July, and September start to organize as. Now, we jump out into November. And November is absolutely saying by this time, we will have at least the quarter point hike, quarter point cut, if not at that point, a half a point cut. So come November, it's absolutely based on this Fed Fund Futures contract and the data that we have here on this graph coming from those futures contracts, there is a quarter point cut discounted, arguably fully discounted, because between the 37% here and the 33%, you consider that to be some sort of accommodation. Boom. That is what we are telling the Federal Reserve we want, right? It may not be what Jerome Powell said, but that is what's being discounted. All right. So great to see you all. Thank you, Ann. Huge. This Week in the Market. Yeah, I'm loving doing that TWM. It's been a lot of fun. It's just brain dumping every Thursday, Friday. The charts are terrific. I'm a chart girl, right? I'm a chart girl. I appreciate that, Ann. Thank you so much. All right. So as always, if you have any questions, feel free to type them on in. And let's jump on into the first question that I see here from our YouTube. Kadar asked, can we take a look at SPG? Sure. And by the way, I'm on the TradingView charts. Big fan of these charts. TradingView charts allow us to run, well, I know for me, what I'm able to do is run this platform on my phone with all the tools that I have come to know and love. And this way, when I'm on my phone, I can see the indicators that are on my TradingView desktop or TradingView laptop version. So it's really great. All right, SPG, Simon Property. So as far as SPG goes, Kadar, on the daily time frame, we were in an uptrend between basically the beginning of December to the beginning part of March. We've lost that uptrend. We're now in a neutral environment. And I think more importantly, When I talk about a neutral environment, the next question is, well, is it neutral bullish or is it neutral bearish, right? And I would have to say it is minorly neutral bearish since price dove below the 200 propulsion. So it is neutral. Don't get me wrong. I'm still looking for overbought, oversold. I would absolutely use the slow stow that I share with you all. 21K. This is what's, gang, just don't put a slow stochastic on your chart, right? If you're going to put a slow stochastic on your chart, this is what I've been using for 20 plus years. It just works regardless of the season of the market. 21K, 3D, and you want an 80 overbought, you want a 20 oversold. Listen to me now. Believe me later, it just works. All right. So that's what we want to put on a neutral chart, overbought, oversold. But I would say it's a little bit bearish at the moment because we're below the 200. I can't say that I see a setup at the moment, though, Kadar. Yeah, nothing imminent. Nothing imminent. I've got a feel for what could happen. I've got a feel for the environment that we're trading in, but nothing imminent. All right. Next up, can we take a look at Goog? Yeah, sure. All right. So caught the Goog chart north of the 200, neutral environment. Goog is very much a part of the XLC. So the conversation there is going to be, Goog and Meta. North of the 200 puts us on the north side of the equator, bullish hemisphere, if you will. And with earnings coming up on, the 25th, I'm inside the window where traders who like to write premium have an advantage in this tiny little window. I just assume leave this particular market alone until after earnings. I might day trade it, maybe a very, very short-term swing, 1 to 3 day type swing. But overall, I'd like to be a buyer. The 200 propulsion may not be a bad idea. That's sitting at about 103 and change. Overall, though, what I'll do is I'll look at the aftermath of earnings. I won't play the guessing game of which way do earnings go. I don't particularly like to do that. So I'll leave it alone until after earnings, or I'll use the 1 hour chart, or I'll day trade it, right? And that's what's happening with Goog right now. All right, next up is, let's see, is a long position in TLT in the cards. All right, so let's jump on over to the ZB, right? If we're going to look at TLT, and this is something I know a lot of you probably already know, but I want to make sure we reiterate this. If you're trading TLT, look at the ZB futures. If you're trading the GLD ETF for gold, look at the GC futures. If there is a liquid futures alternative to that ETF, look at that futures contract. It's the more complete view of that market, of that commodity, or whatever it is you're looking at, because futures are trading nearly 24 hours a day versus, say, the 9:30 to 4 window in which ETFs are active. That said, do I want to be a buyer? Oversold stochastic would be great. We're sitting at a point of control, or around the point of control right now. I'd say it's brewing. Do we need to get to the daily price movement range to do this? Let me show you what the 1 hour looks like with that same DPMR range. I do not believe we will necessarily have to go to the 128 handle on the ZB to validate a long position in bonds. No, I don't believe we will have to. We'll probably find another way in. So the DPMRs are great. That's going to be where the volatility support is. But I don't think it's necessary or probably realistic to expect that much weakness. Although you never know, we do have the Federal Reserve coming up. And that means obviously interest rates and so forth are going to be in play. But remember, we're not expecting higher yields because of the hike. That's already factored in. What we are looking for is, imagine bonds looking 6 months down the road. 6 months down the road from now, gang, we're squarely in that more higher expectation of dovish policy. Forget hold. We're looking for that Fed pivot into dovish monetary policy favoring lower rates. And if that's the case, bond yields should start moving back down, which means that the chart of TLT and the chart of ZB should be moving back up. But I don't have it set up imminent, but I know directionally what we want to do. Are big banks at an entry point now? Uh, Big banks and healthcare, financials and healthcare, XLF and XLV are definitely starting to move. Would I say generally XLF is a buy? Raphael, I'd say within the XLF, MasterCard and Visa are your relative outperformers. So we're still focusing on relative outperformers in terms of XLF. But JP Morgan getting north of the 200 on earnings is a step in the right direction, because now you've got both Berkshire and JP Morgan, the number one and number two stocks in XLV, north of the 200. And that's going to start to create a high tide because of their weighting. All right, next up, Earl asks, comments on macro trend expectation for SPX as we approach terminal Fed rate. So my macro, Earl, is not going to be only for the SPX. SPX is just one variety of S&P, right? So I'll look at the ES futures, and it's not going to be macro specific to that. Oop, what did I just do there? That's not what I wanted to do. There we go. It's not going to be macro specific to the SPX. What it will be is an expectation for lower rates, an expectation for that dovish pivot, and equities are going to benefit. If I'm looking for something specific to the S&P, 3 sectors to keep an eye on, Earl. XLK, which could be problematic with Apple. Apple's just not selling computers, although now they've got some very high yield. Apple's going into banking, gang. We knew this was going to happen between Apple Pay, the Apple Card. Apple's going into banking. It's just probably a matter of time before they're weighted in the XLF as well. However, keep an eye on names like XLK, that's Apple and Microsoft, XLF, and XLV. 2 out of 3 of these are having a great Q2. Healthcare, financials are even coming back pretty well after the regional bank concern. In this week in the market, I'm going to dive into why those regional bank concerns from a data perspective are in the rearview mirror. There was a lot of hyperbole around that. A lot of folks were out there saying this is the beginning of this big drop that they've been looking for. And I just don't see that panning out in the data. We will dive into the data, by the way, on that. So that's the way I would view that, Earl, right? If I'm looking at lower rates, and the only macro, frankly, that matters is whatever Powell says. The only macro mover that is the final word is what any central bank for that country says, right? So that's the way I'm going to look at that. And Fed fund futures are going to continue to be what will guide my analysis, and therefore my opinion, and ultimately my trades, which I've been quite bullish. I think a lot of you know, a lot of traders will find themselves, they really like to be on the bearish side of things. And I get it. If you want to be on TV and if you want to sell newsletters, and panic is a great attention getter. It works. However, if you look at a log chart, right, of the equity markets, of the indices, the path of least resistance, gang, overall is always up. So it's always fascinating to me how much attention perma bears get when in fact they are normally extremely wrong until they're right for a small period of time. Maybe they break even if they're lucky, but it's fascinating to me how much the bearishness does tend to grab a lot of attention. I am not that trader. I've been doing this too long. I know better. All right, Frank asks, I take a look at CVS. Downtrend, my friend, probably one of the uglier parts of XLV. It's a straight up downtrend. This is a short the rip for sure. Okay, so thank you, Frank, for that. All right, back on over to our YouTube channels. And Stanley asks, we take a look at Walmart. Absolutely. Walmart wasn't an uptrend. It's been struggling to stay above, as you can see here, the 200, but it's doing a pretty admirable job of either bouncing from it or around it, right? So ultimately, we are on the bullish side of the equator. Earnings are coming up. So this is going to be, again, another situation. I hate earnings season, gang. I'm not going to hedge that. I hate it. It's a lot of noise. And it's funny because if you look at modern, let's say you look at the new group of a new approach to earnings. The new approach to earnings is very much rooted in the calls and the volatility and the discussion around earnings. Now, those of you that have been in the market a while, like myself, you remember 20, 25, 30 years ago, there was no earnings season nonsense. This is a lot of volatility based on the fact that we're all acutely aware of something we weren't aware of just 20, 25 years ago. You got something in the mail, right? Every quarter. There wasn't all this pomp and circumstance around earnings. I'll tell you what, it makes me pine for the good old days because frankly, earnings are not in and of itself, earnings are not a trend changer. Maybe the rate of change of earnings, but earnings in and of themselves are not a trend changer. Lots of volatility, yes, but directionally influential, not so much. It's a lot of noise. So I gotta wait for the noise to stop, and we'll see what we're left with after earnings. And this is what, am I looking at the right chart? I'm not. I'm looking at MT, but it's the same thing. When I just kind of rattled off, it's the same thing. Let me make sure I'm typing in the right symbol because that's not right. The price looks wrong. Let's see, WMT. Let's try that again. So same thing. I'm going to basically do that. Now, here's the cool thing about earnings on Walmart. We have enough time, right? My cutoff for earnings on Walmart. So I'm willing to trade Walmart until, I'll tell you right now, give me one moment, till the 4th. So May 4. So when Apple earnings come out, that's actually also my cutoff for any Walmart entries. Meaning, as we get into those last 2 weeks of action in front of the earnings release, implied volatility goes up, and it absolutely favors traders who want to write premium as opposed to traders like myself who want to buy it. But as far as a setup that's imminent on the daily, not so much. Perhaps a trend follow on the hourly if you want to be a little bit shorter on the swing trading window, but not bad. All right. I have no problem being bullish here. I have no problem being bullish a lot of XLP for that matter. So if you're wondering, okay, Rog, what does that look like? Right, if I'm looking at XLP. All right, so this is the absolute best way to find relative performance. And all you do is you group the stocks that move together, you group them together, right? So here's XLP. This is Procter & Gamble, Pepsi, Coke, Costco, Philip Morris, Mondelez, Walmart. And you'll notice there are five charts on this screen that absolutely have my attention. If you've never done relative performance before, this is the heart of the Sector Secrets Mastery. And this chart is the heart of my scanning. Scanning now is not about disparate stocks that meet some sort of technical criteria. Remember, most scanning is based upon technical criteria being the same amongst a group, and then that's what the list is spit out. But what connection do they have to each other? That's the question that a lot of traders don't ask. That, unfortunately, is a huge oversight. Because of high concentration weighting, stocks move together like schools of fish. So if we don't know what's moving together, a lot of times we won't think about the influence XLP might have on Walmart or earnings in Pepsi might have on Walmart and XLP. This is why we need to know what that connective thread is. And it is indeed a high concentration weighting. Procter & Gamble, Pepsi, Coke, Mondelez, and Walmart are your relative outperformers. How easy is that, right? At a glance, you can see where they are and see the, in this case, the bullish market trend. So I like Walmart, but then I like those other 4 stocks as well. Stanley, that connective thread being XLP. All right. Next up is Robert, who asks, I tend to like the 15-minute chart more than the 5-minute chart. Is there anything with my indicators that I should change to use that time frame? So in a 15-minute chart, Robert, if you're going to go 15, I would use the hourly price movement range over the daily, because unless you are anticipating taking that 15-minute chart overnight. So for example, if you're thinking, hey, Rog, I'm going to end up taking this thing overnight, then use the DPMRs. If you're going to day trade with the 15-minute chart, in other words, you expect to be flat by the end of the day, use the HPMR, right? So it just depends on what your time horizon is. What is the expectation for the life of that trade? After that, here's the cool part, Robert. We don't curve fit. We don't get cute. Indicators that we use must be both universal and robust. So that means I'm still using the wave. I'm still using the grab candles. I'm still using my slow stow. I'm still using my V-score. I'm still going to use the same tools on those same settings. All right. So yeah, nothing really has to change. The big decision is Do I go with an end of day trading type time horizon, or am I going to take things overnight? All right. So, last question. I see this in the YouTube channel as well as the training room. Okay, yeah, let me just cover this here real quick. I'm running a little over, but for those of you that want to know, okay, Rog, what is that slow stow setting? Sure. Okay, so I can tell you this, gang, with a lot of confidence. I've been using the slow stow setting for about 25 years, which means it's been time tested through lots of market behavior, right? It just works. So what you need to do is put in a 21, it's going to be percentage K. All right. So the slow stochastic in and of itself is a little unique. Most traders use a stochastic. I slow it down, right? I slow it way down by using the slow. And then I slow it down even more by using the 21 setting. All right. The other setting you're going to need is that percentage D. All right. And that's at 3. So 21K, 3D. Here's the last part of it. Use the overbought or that high setting, right? That high setting should be 80. The oversold should be 20. That's it, gang. It just works. I've been using this one for a long time. All right. It just works. It doesn't matter if it's a 5-minute chart, doesn't matter if it's an hour chart, daily, weekly. These are the settings. Okay. All right, gang. That's it. I got to go. I'll talk with you all soon. Be good to each other, gang.